When luxury first landed on the internet, the stores like us and some of our competitors, we were or companies. You can invest in your stores or you can invest online. And with today, with our ability to separate and capitalize differently, we become a brand that is an and brand. The stores can be focused on, and we can invest in the digital company. So an and is the answer.
So does this mean the end of the Omnichannel trend where everything was interconnected between the stores and the online business?
No way. It's actually, it's the beginning of a new way of doing it. I really think we've broken the mold today. And when you think about it, that's the difference that Saks has. The Saks.com business will be supported through arm's length agreements with the stores in anything the customer wants to do. Exchange, return, use their card, everything that they want to do, get something altered that they bought at Saks. And then conversely, even our stylists inside of the stores at Saks Fifth Avenue can have access to the Saks.com inventory, and when they sell it, actually get paid commission. The consumer is going to benefit from this from an omni-channel standpoint.
I guess the other way of putting the question mark is why not sooner?
Why not sooner? Well, look, you know, this is a couple of steps you have to take, and now's the right time, because if you think about where we are today, we're poised kind of at the precipice of saying, okay, the luxury online spend is about to triple over the next few years. Number one. Number two, you have this digital native consumer aging into wealth, aging and wanting that aspirational product. So it's not why not sooner, it's this is the right time. So that's what we wanted to do.
So what are the plans, Mark, for this new digital business? Is it to go public on its own? You're obviously raising capital and capitalizing off this time where digital commerce is where all the action is. What's next?
What's next is the consumer. What's next is going out there, growth, growth, growth. Let's acquire customers. You know, the amount of customers out there for Saks today versus what was out there 20 years ago for us to go get. Folks who want this luxury product is so much more expansive than it's ever been. So that's going to be the focus of myself and the team. The rest of it is just going to come, you know, if it comes. That's our focus right now is consumer growth, experience, and of course, driving that top line.
And Mark, more broadly, the U.S. consumer and the outlook for the rest of this year, are you optimistic? And do you think luxury in particular will benefit from stimulus bills being passed, or is it more tied to vaccinations and reopening?
Yeah, I look at Saks as a fast follower to the GOAT, right? The go out and travel businesses. Once people start re-engaging with going to work, going to the theater, traveling, going to parties, all those kinds of things, we're going to be right there. But I have to tell you, luxury has performed exceptionally well. And, you know, we've talked about it, Wilf. We've talked about it, Sarah, on the show. It's performed, you know, very well throughout the pandemic.
What's going to happen post-pandemic, Mark, to the trends in fashion and to the habits and the way we buy? Is it changed forever?
I think it's forever changing. I actually call it the next normal because there's not going to be a new normal. It's going to be iterative. It's going to go over time. And it's very exciting because a lot of the trends that we're seeing, you know, Sarah, both in fashion and customer behaviors, maybe were accelerated through COVID, but whether it's casualization, whether it's digital, all these things that we've been seeing over the last few years that have been growing just accelerated through COVID, and we're going to see it as we come out.